Today, we're going to analyze this stock and see whether right now is a good time to invest in the company for the long term. First, let's see if there's a good business behind the stock. The company is projected to grow its earnings this much per year over the next 5 years, while you can compare that with the S&P 500 over that same period. You'll also see the points given to each stock as a comparison. When it comes to profit margins, the company gets this much out of its business, while the 500 companies of the S&P get this much, which correspond with the points awarded. I like companies that pay out a dividend. Dividends are the only thing separating a true investment from pure speculation. We can compare here which pays a higher dividend and the points given to each. As it relates to the dividend, we want to know how much is being paid out to shareholders. The lower the payout, the more is being reinvested. Here's the payout ratios for the company and the S&P 500, along with the points. Cash and cash equivalent is a basic measure of cash available for payouts, reinvestments, and acquisitions. This metric benefits larger companies since they often command a higher economic value. Here's the cash held by the company and the S&P 500, along with the points awarded. Effectiveness is basically when you add the returns on assets, equity, and invested capital, telling us the effectiveness of the business. Here's the company and the S&P 500's effectiveness, along with the points given. How good is an investment if it never goes up? Looking at the past relevant years, we can see the compounded annual growth rates of the company and the S&P 500, along with the points that go with such appreciation. I look at the PE ratio as a measure of speculation. When it's high, there's more people speculating on the stock. Here's the amount of speculation with the company and the S&P 500, along with the points awarded. The PEG ratio takes into account the expected growth with the PE ratio. A PEG ratio under 1 is what we want. Here's the PEG ratios for the company and the S&P 500, along with their point totals. The quick ratio tells us if the company can pay off its short-term obligations. A quick ratio over 1 means it easily can pay those obligations. Here's the company and S&P 500's quick ratios, as well as the points given. While many investors look for a higher 200-day simple moving average, I look for one that's lower because it means more value. Here's the SMA 200 values for the company and the S&P 500, along with the points awarded to each. Short float tells us how much are investors betting against the stock. Here's the short float for the company and the S&P 500, which tells us where investors are betting more heavily against. The average Wall Street grade from a strong buy at 1 to a strong sell rating at 5 tells us what other analysts think of the company and the S&P 500, as well as the points awarded to each. This last metric is income divided by the number of employees. This gives us the dollar value produced by each employee of the company, as well as the average of the S&P 500, along with the points given. Adding everything together, we can divide the total points by the maximum points available, which is 70. That gives us the business grade for the company as well as the S&P 500 as a comparison. We want the business grade to be above 50, but more importantly, above the market. But of course, we can't forget about the fair price and whether it's the right time to buy the stock. I use a discounted cash flow model taking into account a 10% margin of safety. That translates into the company's fair price and how many percentage points above or below its current stock price is. When we compare those numbers with the table below, we can see where the company's stock lies. Before we get to the final grade, join my Patreon and get access to every company I've analyzed so you can compare between all your favorite stocks. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. Finally, we can put everything together and get the company's final grade. Adding the business grade and the fair price grade, we can see here the company's final grade. Anything less than 50 means it's not a good long-term investment. A final grade above 50 means it would make a good long-term investment if you bought the stock right now. So what are your thoughts? Are you going to invest? If you do, invest wisely, and as always, take care of your money.